Marketing. Thank you very much for joining us for this interactive webinar with Allstate Benefit Group site. Today with us we have Chris Novak, the small group health, and also Cody Wendlum, which is also the mid-market large groups with Allstate Benefits. We're going to be going over some different aspects of what summation of a group is and how to approach small or large businesses. We will ask you for to if you have any questions to please wait until the end of the webinar so we can actually give sufficient time to both of them to explain to you how to approach those people. And then if you need or have any groups or that you have in mind that you wanted to process, you can send us some census and we'll be able to assist you with that. Without further ado, I'll introduce you to Chris Novak from the small market group with Allstate. Chris?
Hi, good morning, everybody. Appreciate you taking the time to visit with me, Corey, and Western Marketing today regarding Allstate Benefits and the group options that we've got available for you folks through Western Marketing. We've had a great relationship with Western Marketing over the past few years, in which growth has continued to move upward, and excited to have you guys as part of that growth moving forward. We're going to talk a little bit today about small group and mid-market group health insurance, how similar they really are, and also the small nuances that make them different as well. And so with that, I'm going to jump right on in. I know we don't have a ton of time today. So we're going to give you kind of the broad overview of what it is that we're looking at. Now, quick question. Are you guys able to see I think I've got these slides on the wrong sides.
Yes, you may want to open it up a little bit bigger and then flip the size.
I gotta figure out the escape.
And then down below at the bottom.
You go like this, and then it's not. I gotta figure out how. Do you know how to display settings?
There you go.
That's better.
There
okay.
we go.
Perfect. There we go. Yes. All right. So if you all have heard of us in the past, you may have heard of us referred to as National General, and if you want to go way back, we were once Assurant Health. In the last year, since January 4th of 2021, we've begun our process of becoming Allstate Benefits, in which the small group benefits now are housed under the Allstate Benefits name and marketing. So really exciting part for us is that obviously we become a much more well-known company. Not everybody knows the name National General. Everybody knows Allstate. So then and now, we were a $4 billion company. We are now a $44 billion company. We are a Fortune 100 company as well, and an AM Best A+, A+ rated company as well. So small group health insurance. What we're looking at here is a self-funded plan for small groups as small as 2 enrolled employees, and specifically small group all the way up to 50 enrolled employees. These plan designs are going to be made up of network plans, advantage plans, and core value plans, and we'll get a little bit more of the nitty-gritty of what those actually are in a minute. And then we also include self-funded dental plans. There is a coming down the pipeline, a vision plan that should be included within the platform as well. That's a very exciting move forward for us as well, because it becomes one true full benefit package for employers to offer their employees. And then we have our voluntary benefits, which are products that obviously employers can offer to their employees on a voluntary basis. As I mentioned here in the past, National General, we didn't have all the great resources that Allstate does. And now we have great things like, for example, brand recognition. Who doesn't know Mayhem, and who doesn't know Dennis? Dennis is the black guy here who has got the really deep voice and I think puts everybody at ease when he talks about Allstate. technology. We're going to see a lot more technological advancements and improvements within our platform to make it life easier for the agent and for the employer as well. We have already begun online application process, so we do have the ability to get groups enrolled with online applications versus doing the old school paper apps. We still do have the paper apps available, and actually, I would say that's still a fan favorite for a lot of agents that we work with, just because there's a little bit more control that the agent has with that capability of using paper applications. You have the DocuSign options as well. That really comes in with employer applications, in which employers will fill out a quick form for us, and then we pivot it over to DocuSign and simplify that process, so they're not looking at our 56-page employer application. And then there's a lot more to come as we move forward as well. As I'd mentioned previously, we are looking at the group space of 2 to 50 enrolled employees. Our average group size that we're writing right now is 12 enrolled employees. Now, when we talk about the self-funding product, it is an underwritten product. And because of that, our demographic that we're looking at is a low-risk demographic. And that has specifically to do with the health applications that are completed. We do have a couple of niches that we can jump into as well. We do write virgin groups. Not a lot of carriers want to write a virgin group, or a group that's just starting. Maybe their business started as of 1/1, and they don't have any payroll or any real business experience as a company. We will write those groups. A lot of other companies don't want to touch those because they don't feel like those are a decent risk. I'm not sure why.
Chris, question.
Yes.
Chris, sorry about that. Would you do me a favor and adjust your microphone? The guys are having echoey. It cannot be heard if you don't mind. I apologize.
I'm not sure. Maybe I can just move closer. Is that better?
Maybe Corey can put himself on mute and see if that will help. Go ahead. Continue. I apologize.
Okay. We also do write groups that currently have coverage in place. We like those groups because we know what we have to compete against a lot of times. And then last but not least, we are industry agnostic. We do not discriminate based on industry. So if you are a bar, we will write you. If you are a rock crushing operation, we will write that business. If the group is healthy and it's a good fit, we will jump in there as well. And I apologize. I do have my colleague Corey Warnland on here as well. He is our mid-market rep. And Corey, if there's anything that you'd like to jump in on, please feel free to jump in on that. Corey, do you want to say a couple of things before I keep moving forward? Sorry.
No, so I handle, Chris and I sell the same product for the most part. Chris is small group, 2 to 50 enrolled employees, and then I handle 51 or more enrolled employees, not eligible, but we're swimming upstream to some of these larger groups that give all of you brokers access to a lot more people, a lot more opportunities to cross-sell. But for the most part, there's a lot of overlap. When you're in the 51 plus space, my average group size is actually around 125 enrolled employees. As far as the demographic of low risk, the one thing to keep in mind when you're looking at a group that's larger and has a little bit more scale, where you're not talking about a 5-person group and their medical history, because on a 5-person group, one person can really upend what their risk profile is. In the mid-market, there's so many people that you're bound to have some risk. So a lot of our conversations are steered less toward just the bottom line price, but a lot more toward the long-term strategy. And one of the things you'll learn in working with Chris and I is we take a very hands-on approach to develop that strategy and make you feel comfortable and ultimately help you with the sale. So the only thing on top of the virgin groups that I would add that a lot of brokers really love is we also write 1099 groups. And Chris, maybe you were going to address this, but 1099 groups are one of those weird, hard to place groups where no carrier wants to touch them. So when you have us, as a tool in your toolbox for a group looking for coverage, it's one of those unique groups where we might be their only option and you're sitting in the driver's seat for, things like that. But really that's all I'm going to add for this slide, and I'll add in my 2 cents as we keep going on. Thanks, Chris.
Sorry for not getting involved a couple of slides earlier.
Okay.
All right. So there we go. So startups. Startups are eligible, flexible eligibility. With the small group space, our eligibility is very easy. It is 50% of all eligible employees would be enrolling, or 75% after valid waivers. We also have the ability to do carve-outs, things of that nature, in which if a group, for example, a restaurant, where most of the employees either are part-time or are just paid very low incomes and can't afford health insurance necessarily through their employer, we can do carve-outs and carve out maybe just the managers who make a little bit more, and carve out that eligibility pool, making it a smaller group, but at the same time, we'll be able to hit the participation that we need to. The networks that we are offering are Cigna, Aetna in Iowa, and I know there's probably some other folks who aren't in Iowa here. There are other more narrow networks in each state that we have available as well. And then we also have our reference-based pricing plan. Our reference-based pricing plan is a very cool plan that we created a few years ago and have had a lot of success with. There's going to be a little bit more of a handhold with that type of product, but at the same time, we're going to give you all the tools necessary to make sure that that handhold is done so successfully. All right, plan designs. Now, Corey there's going to be a couple of different things that Corey has that I don't in terms of plan designs, and his are going to be more high level type of differences, but the plan designs themselves are going to be very similar. We have PPOs, we have HSAs, we have MERP plans, we have HRAs, you name it, we've got all of those options available within the small group health space. We have deductibles starting out from $500 all the way up to $7,900. We have copays, HSAs, we have doctor or prescription copay options. We have a slew of different plan designs that we are able to offer and create. What's really cool about our product is that we are flexible in creating our plan designs. A lot of times with the fully insured space that you see out there right now, like a Blue Cross Blue Shield plan, there are buckets of plans. You have those platinums, the golds, the silvers, the bronze. Those plans are very stagnant. Here, choose from these 15 options for your group. Well, those might work just fine for a lot of employers, but at the same time, the employer who runs a business and kind of likes to have discretion over what his day-to-day looks like, he might also want to have that same discretion over what the group health plan benefits are for his employees. And because of that, we have the ability to mix and match all of these different levels of options. So we can change up the copay, we can change up the out-of-pocket maximum, we can change up the deductibles. All of those things can be doctored into really whatever the employer would like to be able to offer or see, and show that to the employer as an option for them. We do have preventive services.
And Chris,
yes.
Chris, I'll add to that, like the amount of plan combinations, if you look at all of the variables that we have, it's well over 100,000 different plan options that you could potentially have. So the reason it's so important when you're going against, like you're prospecting against an agent who has one of these canned plans, is all of these benefits have a price associated with them. And if you're trying to get more competitive on price and you have a healthy group that you can see on their apps who's never used the ER and wants an ER copay because they're used to it, well, if you're never using it, Chris can easily take that lever and say, we don't need the ER copay, you've never used it, and save a significant percentage in the premium. So having that flexibility really helps you as a prospecting agent, not only show them a good plan design, but say, hey, based on how you're using it, why would you pay for something you don't need to use? So it's just one of those things where you're bringing some value to a space where a lot of times it's just canned plans that are one size fits all. This is a differentiator for you. Sorry, Chris, go ahead.
That's great, thank you. These plans are U.S., we have the preventive services covered at 100%, so just like every other health plan, there's that is being offered, and they do meet minimum value and minimal essential benefits. In other words, employers are not going to be penalized for offering group health insurance. And there we go. Computer's not wanting to work today. All right. And that was the same plan. So quoting process, what does that look like? How do we get that going? One person you can always reach out to is the man that runs this presentation, Sandy. He will be able to assist you in getting quoting going here as well. But simply, if you would reach out to myself or to Corey and say, hey, I think I've got a group that would be interested in looking at your plan, get us the census for that group. So what we're looking for within that is the group census, which is made up of the name, date of birth, and if they have a spouse, what their date of birth is, and the number of children. If you have the group's current plan design and renewal rates or current rates or both, we'll accept all of that. That really gives us a big heads up as to where we stand against a competitor. There are times that we will quote a group and we will absolutely knock their socks off. We're going to be winning by 30% before we get underwriting going. And it looks great. There's going to be other times when we look at the same group and we find out that our rates are not so competitive. It's rare, but it happens. If you take us out to California, we're probably not going to be the most competitive in all areas of California, that's for sure. But with that being said, having that data at our fingertips will help us. And then we can also send that when we're not as competitive in certain areas, we can send that down the river to our actuaries and our product managers and say, hey, look, we're not competing very well here. We need a little help. So those are two reasons why we'd like those current and renewal rates if possible. Once we get you a quote, we'll shoot that back over to you, and you'll present that to your employer. If they like what they see, you'll have them fill out employee applications. Yes, you can have groups fill out employee applications before we even run a quote. I have a lot of agents that do just simply send in apps right off the cuff here, because it's simple, and that way when you're taking the presentation to the employer, you're talking about real rates. This is something that we can actually go out and sell at this moment in time. Once you have that offer in hand, if the group set likes what they see, we send them over the employer application, and that process takes generally about 48 to 72 hours to get that completed, back to underwriting, and if everything else goes right, the implementation process, which would be an additional 5 to 7 business days with our third-party administrator, Ally. So we're going to jump into what a quote actually looks like. All right. This should look just like any other group health plan that you've ever looked at. Some of them, may look a little prettier than this, but our presentations will also. This is just the meat and potatoes of it here. So when you're looking at our quotes, you're simply looking at, things like deductible, coinsurance, and copays. That's what most people are looking at when they're looking at group plans, along with the premium. So if you go ahead and take a look at the third line down here, you'll see the group's deductible, $1,000. 100% coinsurance, a couple lines down from that, and with a total out-of-pocket maximum of, well, still $1,000. Family deductibles and out-of-pocket maximums will simply be double that of the employee-only rate. And then a little further down the line list here, you have your copays, your network, which in this case would be looking at the Aetna Signatures Administrators Network, another prescription copay option, diagnostic x-rays and labs, covered at 100%. These are all different options. Now, all of these things that I just mentioned are interchangeable. We can, not interchangeable, but rather can be manipulated. So we could have a higher out-of-pocket maximum. We could have a different coinsurance. We could have more benefit-rich or less benefit-rich copays. Whatever the employer wants to offer. And obviously, all of those items will pull at the string of what the total premium is. At the very bottom, you will see that you have your total premium. All right, if an employer likes what they see, that's great. We can keep rolling here. But now let's talk about what makes these groups self-funded. So for a lot of employers, the word self-funding for a small business is very scary, because when you think of self-funded businesses, a lot of times you're thinking of Amazon, you're thinking of US Bank, you're thinking of large mega corporations. And that is not what we're really offering here. We're not offering the exact same thing. Corey's is a little bit closer to that, but really what we're offering at the end of the day is what we like to refer to as a level funded plan. And the reason we call it level funded is because what we're looking at here is just like the fully insured side, you have the total monthly premium being the extent of the employer's responsibility. So in this case, we're looking at the bottom line here of total. That would be the extent of their liability. Now, it is self-funded, and I'm going to explain how that is. But the level funded component of it it speaks to the level of claims an employee, the group has as a whole. For example, if they have a terrible year, a terrible month, let's just say 3 people have heart attacks, the total monthly premium, even though they're self-funding this, is still going to be $15,497.39. If they have a great month and they don't have any claims whatsoever, it's still going to be $15,497.39. Okay, so regardless of what the claims look like on a month-to-month basis, their 4 tiered rates, their employee, employee spouse, employee child, and family rate, those won't change on a month-to-month basis, and the exposure to the employer is simply just the total monthly premium. So if you look at the 3 lines above the monthly total, that is how we break down the monthly premium. The stop loss premium, which we're going to talk about in a second. Admin, sales, general expenses, that money is going to go to our third-party administrator, Allied Benefit Systems, Inc. They cover they take care of claims, customer service, and your comp is in there as well, and that'll get paid out to you by Allied Benefit Systems, Inc. And then the most important bucket to an employer is the claim pre-funding. So we talked about this being self-funded. What we're doing on a month-to-month basis is we're removing $6,083.46 to self-fund the group's claims. If you multiply that number by 12, I'm going to take you to the second from the top line. That's the annual aggregate limit. So 6 times 12, or $6,083.46 times 12 takes you to $73,001.52. That is the group's self-funded bank account. Now, if an employer were to have this whole account drained, and again, we talked about this just a few seconds ago, if that bucket gets drained and there's no money left over, they don't get a refund at the end of the year. All right, no big deal, but their premium total will stay the exact same for the entire year. On the swing side, if there's money left over in that bucket at the end of the year, they're going to get 50% back of whatever's remaining in that bucket. So if they have $40,000 left over, they're going to get a $20,000 paid check written out to the employer. It's a pretty cool icing on the cake for an employer. The idea here is that after underwriting, and this group is a healthy group, we'll be saving them money on a month-to-month basis. If they can get money back at the end of the year, that's the cherry on top.
And Chris, I'll just add to this. So a lot of times brokers who don't sell this, they want to know like the why. Like, why are we doing this complicated, level funding? In the fully insured market, you're not able to underwrite for small group. You have average community rates. So the risk of every group is pooled with all the risk of the other groups. So by going to a self-funded chassis and setting it up like this, you get to skirt around legally the community ratings. You get to underwrite groups. So we reward groups for lower risk profiles with better premiums. But instead of giving them the risk of a true self-funded policy where they have those variable expense every single month, we just have the group pre-fund their potential claims. And that's why a lot of times in this space, we like to call it self-funding with training wheels, because you're taking advantage of the benefits of self-funding like all large employers do, but you're eliminating the risk of having variable expenses every month. It's one equal payment, just like Chris said. You're pre-funding the claims, and if you have less claims than what we pre-funded for the year, you get a refund back. It's really cool.
Thanks, Cor. All right. So how can we be successful? Besides communicating with Corey and I when you have an opportunity popping up, doing a little bit of field underwriting on the front end. A lot of these, especially on the small group side, a lot of these small business owners know what's going on within their groups. They're like a larger family at the end of the day. They know when Betty Sue's husband got prostate cancer. They know when Somebody's having something going on from a health standpoint, especially on the smaller cases of 2 to 15 enrolled employees. As you get a little bit bigger, obviously that might tend to become less of the situation. Qualify the case. Find out what they're looking to do. What do they want to make a move? Why are they willing to shop right now? Do they not like their premium? Do they not like their plan design? Do they not like how things are being paid out? Find out what kind of industry it is. We tend to work really well with the blue collar industry, and that's because you generally get a younger, healthier census for the groups, because those jobs are usually a little bit more hands-on and folks are moving around a little bit more. So you tend to have the younger, a younger crew with those, and they tend to be healthier. Use us as a resource and sell against the status quo. Fully insured is something that everybody can offer. As you walk in the door with Blue Cross Blue Shield, with Humana, with Cigna, with Aetna, a lot of times every other agent is looking at those exact same cases, and they're going to, at the end of the day, offer the exact same price. The only thing that they can really differentiate on is themselves, which is obviously an important key to a sale. But if you walk in the door with the same thing everybody else is, you've already set yourself in that bucket of, I am like everybody else. Walk in the door with a self-funded product that everybody else isn't offering necessarily. You might find a couple of them that actually are. You put yourself in a much smaller group of agents that are likelier to get that business, because you're willing to step outside of their comfort zone of the fully insured world. We do have account managers. Now, Corey does have an account manager as well for the mid-market. There's one for small group, one for mid-market. Now, these people they are dedicated to your cases. They handle the service, the renewals, and any questions that you might have in the group health after a group health case has been implemented. You do also have access to our account specialist team. That's going to be more so for day-to-day customer service type things, like, hey, I got to add somebody on, or this person just moved, they have a new address, we need to change up their address, something to that effect. Very simple stuff. And they're always our first line of defense. So that's who you're going to want to lean on when those things come up. We do have voluntary benefits as well, as I mentioned earlier. I'm not going to dig too deep into those. You can see what they are right here. And those are options that we will hopefully have within our quoting as well soon. Those should be pretty much shelf rates at this point. And it's just a matter of getting our technologies to talk to each other. But if you have any groups that want to offer group life, hospital indemnity, indemnity medical, and so on, contact me, contact Corey. Let us take care of you and get you in contact with the folks that can help take care of your clients with these products. And then I'm going to pass it on over to Corey regarding kind of how to quote his business as well.
Yep. Thanks, Chris. So again, there's quite a bit of overlap with the mid-market and the small group. A lot of what I'm selling is also on a level funded chassis. So a lot of groups that are fully insured, they start to realize through the course of having their benefits and continuing to get the same fully insured renewals every year, where the rates keep going up and it seems like their benefits keep getting a little worse. Suddenly a light bulb pops up, and the natural progression for a lot of mid-market groups is to move to a level funded policy. For me too, the next step after that is we also offer true self-funded policies. As far as getting a quote for me, I'm not going to read through all of this, but rather than using applications, there's some groups where we will still need medical applications, but groups of this size, we normally can get good claim data, meaning from their previous carrier, we have a monthly list of premium, and it's lined up right directly next to their claims. You can see their loss ratios, you can see how they're trending, but with that claim data, our actuaries can actually come up with rates with some competitive offers. I do offer network plans, but I will say when you're in this mid-market space, it's very competitive. There's a ton of brokers going after these whales. Like Chris's space, there's a ton of opportunity. It's much more of a commodity-based price sale. Ours is going to be a little bit more strategic. My average group size is $700,000 in annual premium. So they're pretty nice. They're hard to get. And when they're hard to get, you need to use all of the tools in your toolbox. And one of those is the reference-based pricing option that we have. We have a couple of hybrid options. But what I want all of you to take away from this is, are these whales harder to get? Of course, everyone wants them. But do we have the tools to get them? Yes. And I want to be a strategic partner with you to help educate you on what we need to use in our toolbox to get these. And the main thing that I would stress to all of you is, rather than send me a census and just kind of throw mud at the wall with some of the things that are on my quote RFP list, I really think it's important to schedule a quick phone call. When you have one of these opportunities on your plate, it's so worth it to spend a quick 5-10 minutes to pre-qualify the opportunity, to find out who the decision makers are, to find out what relationship you have, to find out what the group is looking for. Are they looking for a 5-year strategy? Are they just looking for, X, Y, and Z? When we have those pre-qualified conversations, it normally saves us a ton of time on the back end, because again, the sales cycle on $700,000 to $1 million premium annual groups, it typically can be 60 to 90 days. So it's a longer sales cycle, and getting your ducks in a row, given how competitive it can be, is a really wise decision. So on all of these, I would always stress, just give me a call. I want to help educate you, show you what we're good at. On the first couple of calls or first quotes where we get a chance to present to an employer, I want to be on that call. I want to be a resource for you to help you out. And typically when I'm able to be on those first couple of calls, my closing ratio is more than double than when my broker is doing it on their own. And part of it is it's a little bit more of a complicated strategy call, but that's how I get paid. That's what I'm here for. And then the last thing I'll mention, Chris mentioned all the voluntary. I know Western Marketing has just a treasure chest of different products you can sell, even on the groups where we miss. If we miss on the group health and I have 122 enrolled employees, just think about the door opener that is for all of the different cross-selling opportunities where you can sell other products. So I always tell brokers, you're not going to win them all, but there's always ways to win when you lead with something that they haven't seen before. Group health, where every business 50 and over has to buy group health insurance, so they want to talk about it. It opens a lot of doors, even on the L's, but if you give me a shot, I'm sure we'll get some W's too. So, I'll be able to send out the RFP checklist for me. But again, I think the most important thing I want to stress is, when these opportunities come across your desk, spend the 5-10 minutes to give me a call, and I'll be able to vet it right away to see if it's a good opportunity to chase. And sometimes I might tell you it's not a good opportunity, but that's all for the purpose of being efficient, respecting each other's time and chasing things that do have the ability to bear fruit.
And that's where we would leave off. We're going to want to open it up to questions.
Thank you guys very much for such a wonderful webinar. I'm going to see if I can see some of the questions of some of the agents. I'm going to open it up 5 minutes time frame for questions to allow for everyone to come up with the questions. Very important that I want you to understand is that no matter what the situation or what type of groups you have, we can definitely find a solution for whatever needs you have. So don't hesitate to reach out to us at Western Marketing, and we'll be more than happy to assist you, and with the help of Allstate Benefits sites on the small and mid-market group, and also on the all the benefits that they provide as well. So I'm gonna give you 5 minutes for questions, and then I'll close it. I'm gonna send you a copy of this webinar and a copy of both census materials, so you can actually have a sense of what a census is. And don't worry about if you have never done any group insurance sales. Don't worry about not knowing what to do. Our team and also the team at Allstate is very capable of helping you move through those hurdles so you can actually achieve the W, like Corey said. So let me see. I have a question here. Is this available in all state, or what state is this available at?
These are available in all states other than Hawaii.
Other than Hawaii.
And
Okay.
I'll add to it that there are a few states that are high regulatory states that are just hard to place business in. New York and California are extremely hard to find the right group. So sometimes when you get, the perfect opportunity, there's just some rules and regulations that might make us not competitive, where we might out of the gate just say, no, not a good fit. We're going to decline it.
Also, another question, explain reference base again. What does that mean, reference base?
I can do reference base because this is predominantly what I sell. So reference base it's a outside of the box way to look at getting your health care paid for from your insurance carrier versus what the status quo is. Again, you're looking for differentiators that are different from the status quo. That's how you're going to gain new business. So a lot of you are familiar with what are called PPO networks. And a lot of insurance agents will sell the network because a network gives you access to a provider, a hospital. However, PPO networks, if you understood after the network discount what they actually reimburse hospitals, it's really a lot of money. These same hospitals, they also accept Medicare patients. I'm sure you're all aware that Medicare pays a little bit less to hospitals than what these PPO networks pay. And we actually have proof. We know that nationwide, PPO networks, even after discounts, pay hospitals about 2.5 to 3 times the amount for a service versus what Medicare would pay. There's a big gap. What it means is the network plans are subsidizing the hospitals for all of their Medicare and Medicaid plans. So what reference-based pricing is, we see the problem. What we do is we scrap the PPO network. We use Medicare reimbursement rates as a reference base point. And what we try to do is thread the needle by paying a percentage above Medicare, but we pay less than what we would have paid with a PPO network plan. And basically what happens is you're able to go to any provider you want. We pay, on average, it's about half. We get like a 50% discount versus a PPO network plan when you just do all of the math. And the reason that's so important is, remember, we're selling level funded plans, where a good chunk of your insurance premium is pre-funding for claims. And if you don't use it, you can get it refunded back to you. So we call this a cost containment strategy because we literally pay less for claims. And by doing so, it enables groups a better chance to get that cherry on top, to get that refund back. It's like anything in life, depending on if you want the good or service, there's certain places that'll sell it to you for less and certain places that will sell it to you for more. Reference-based pricing is geared for the people that are looking for unique and creative ways to not make it necessarily easy, but looking for ways to save money. And the reason I say it's not necessarily easy is because the two downfalls of reference-based pricing are you don't have a contract, and when you don't have a PPO contract in place, hospitals could balance bill you. That's a non-issue for us. We have a solution for that. All the member has to do is call our member advocacy team, and we take care of that balance bill, and the member's not financially responsible. But again, this will take some education to teach the member on how to do that. And then every once in a while, this rarely happens, you have some providers that won't accept the plan. Just like some providers won't accept Medicaid or Medicare patients. It's few and far between. That same member advocacy team will then direct you to a provider that you can go to. But when you look at it overall long-term, like on a 5-year strategy, the simple cost containment tool of reference-based pricing, I've shown little 5-year trajectories where we're saving the group easily over $1 million. When you account for the refunds, the savings in premium, it's a really unique product, and it's one of the only ways mid-market groups can control their costs. And then on the small group side, it saves a ton of money. And if you're prospecting for new business, it's probably your best differentiator to show something new, because you're gonna sticker shock them with some really low rates, and they're gonna want to talk to you, and that's the perfect tool to at least start a conversation.
I appreciate it, Corey. Like you said, it's very important to know that at the end of the day, there's no balance bill for the client. The plan with the advocacy team will take care of that balance bill. So it is a very nice tool, and it's a very, very unique situation where you put yourself on when you actually are looking for a group and you're competing against a traditional plan where you don't know where the money is going. The company keeps that money. That's what it is. So I wanted to thank everyone for participating today on this webinar. I'm going to see if I can get a copy of this and send it to you guys. For those of you who have not done any business with Western Marketing or have not contracted with Allstate Benefits, please request the contracting. Contracting is done in less than 24 hours. I get you a contracting link, send it to you, and then within 24 hours, you have a writing number, and then we can actually send you a census so you can actually start prospecting. And like always, it was a pleasure to talking to you guys. Thank you very much, Corey, for a wonderful webinar. Have a blessed one. Thank you.
Thank you, everyone.
Thank you.